why is oil crashing? We've seen this week where it's just been kind of dropping quite hard compared to where it was a month ago.
Yeah, so I think the biggest reason oil has been coming down because it actually hit $130 a barrel as a high, got down to $95 this week, give or take. And really, what has been happening is that there's a fear of recession coming as the Federal Reserve has been more aggressive in their conversations, as we're seeing more softening, in the overall indicators that we see, new homes, building permits, applications, mortgage applications. So housing is looking like it could soften up, all those things. So when you have less economic activity, you use less energy, right? And so the price of energy comes down in recessions. And so we've seen that. As a matter of fact, it's been pretty dramatic. Just in the last month, a lot of these ETFs that have energy stocks in them have had a really bad time. A really good year altogether,
Yep.
still, even with that downturn, but big downturn. And so that's why, although, please keep in mind, if you look real closely, just at the last couple of days, we had, Russia, essentially Russian courts had cut off 1.5 billion gallons of a day, barrels a day of oil production from Kazakhstan. And we saw a big jump. We went from 95, I think it's up to 105 now or something along
around
those
that.
lines. And so, that can change very quickly. And it's one of the problems with investing in oil or energy, in my opinion. Russia starts to get aggressive and cut back on production in different ways, even their own production, make less deliveries, price starts skyrocketing. You start to see those ETFs, moving up, like Vanguard's Energy, VDE, or whatever. And then all of a sudden, Saudi Arabia comes in and starts to, talk about increasing production, or China starts to more and more because this BA.5 Omicron variant is running around. They got their zero COVID, and all of a sudden, boom, you start to see a slowdown because China uses massive energy, because they're a huge producer. So if China locks down, they're using less energy, oil starts to come down. There's a lot of inputs into energy. It's why I don't really prefer it as an individual target. I have used it a few times, but it's really difficult one to use just because of what's going on altogether, right?
Yeah, and like Kazakhstan could eventually come back online. It's just going to take some time. They're not, the pipeline's always going to be the easiest way to transfer oil, but there's other ways. And
Right.
if countries are willing to invest, and I think countries at this point are going to invest in alternative routes that kind of exclude Russia.
Yeah, and exactly. Whether that's getting oil from other countries. And some of it, like liquid, like gas, is a tough one, because most of the big gas comes through a pipeline. They can do liquid, liquefied natural gas, LNG, and but you got to have a certain port, to capture that from one ship onto the port, and so those have to be built. So the U.S. has surplus in natural gas, but getting that to Europe, it'll happen actually. So that'll be one of the alternatives that come. The U.S. will start to produce more gas for Europe than we are now and ship it across, but it just takes time. And so they have a December 5th cutoff for Russian energy. I don't know the exact parameters, but they're cutting back in Europe on a very aggressive basis on the Russian oil, natural gas, and coal. And so that's going to create a big restriction in the market because they're going to be going other places to get that. And so, we'll see how that plays out. So that's why even if oil is crashing, I actually think oil is one of the biggest threats to the stock market right now because of what could happen as Europe starts to push away from Russia, and potentially as Russia starts to use that as a weapon to push Western economies into recession by making oil $160, $250 a barrel.
Yep.
That's a pretty good weapon. I'm surprised it hasn't happened yet, and there's probably something I don't know about that doesn't make sense, and that's why it
I think
hasn't
the other
happened yet.
producers would cut in if if you give me $200 a barrel, I'm gonna find a way to get more oil out there.
Yeah, but even that might take time. I mean,
Yeah.
because they've had some troubles getting things restarted. Like here in the U.S., there's an awful lot of oil pumping that hasn't restarted yet. Even if they want to, there's some issues, and Oil's got this weird thing going on where people are afraid to put big money into it, which sometimes is what it takes to refine it and pull it out of the ground, because they're afraid that clean energy is going to be a big replacement. You got
Hmm.
states like California saying you can't buy a new gas car here by, I think it's 2035 now. Originally it was 2030. Other states have followed along, and you've got China trying to become energy independent, which means a lot of clean energy by 2060. If you've got a big investing pool that wants to put money in to drill or restart, it takes money,
Hmm.
and there's less money coming in there because of this fear of because the payback usually on those investments is so long.
Yep.
And so, do we really have that long? If a payback is 10, 20 years, where will oil be in 10 or 20 years
Hmm.
versus the clean energy, the battery storages, and those types of things? So, it's a tough environment right now to figure out what's going to happen there. There's a lot of different things going on. It's really, really interesting.